Hello and welcome. My name is Wakamiro. I comment on matters finance, investment, and the economy, and everything in between to help individuals make better economic decisions. Recently, I was hosted by the 52-week Saving Challenge group on a session on how to invest in government securities. We didn't get enough time to respond to all the questions. And the purpose of this live video is to respond to some of those questions that have been sent prior, in between, and after the session. Let's just go direct to the questions. The first question that we had been asked to differentiate between treasury bills and treasury bonds. Differentiating between these two, we would have to talk about the time frame. For treasury bills, these tend to be the short form of the government securities. You're investing for anything between 3 months, 6 months, or 12 months. On the other hand, treasury bonds tend to be mid-term and long-term, and they come in anything between 1 year and 30 years. Also, a difference we will have to talk about is the expected returns from these two form of investments. For treasury bills, due to the short-term commitment of funds, you will earn less in comparison to treasury bonds. For treasury bonds, these tend to give investors a better rate of return due to the long-term commitment of funds. So that would form the two bases of the differentiating between treasury bills and treasury bonds. The commitment of funds for a longer period or shorter period, and also the expected return. The other question that had been asked was which is the better option between the two? Which should one go for? And I answer this question with another question where I ask, what is your investment goal? Because your investment goal will inform the type of security you should go for. You'll find also someone with a goal that neither of the two would sort, and one would have to go is maybe a different type of investment. Take, for example, someone who has a goal of having an emergency fund. Neither of these two would fulfill that goal or purpose that the individual has, and they would have to go for a money market fund. So which serves you better between these two will also depend on the investment goal that you have in mind, and that would you would have to say what your goal is before you can decide whether to go for a treasury bill or a treasury bond. Another question that we had been sent and been asked to clarify was how do treasury bills and treasury bonds work? You are basically lending the government money, and what you will happen is you will receive back your money after the agreed time. If you have gone for a treasury bill with a tenure of 3 months, you would have to wait for the 3 months and get your money back then. Or if you are going for a bond with 10 years, you would have to wait for that period before you redeem back your investment. So for treasury bills, on another how this works, for treasury bills, these are issued at a discount. So if you are investing 100,000, we would have to calculate your rate of return and also the tax. So this would mean you will pay less than the face value. Let's imagine you are going for a face value of 100,000, and your expected return maybe is 8,000. So you will pay 92. You will pay 92,000 and receive back 100,000 at the end of the period. That is what we mean by saying that treasury bills are issued at a discount. For treasury bonds, these work where you bid the amount you want to invest. Take an example of 100,000, and you will be receiving your interest twice in a year, semi-annually. Let's go to the other question. We had been asked the minimum investment in either of the two, between treasury bills and treasury bonds. And the minimum investment amount you can invest in treasury bills, we are talking about a face value of 100,000. For treasury bonds, the ordinary treasury bond, the minimum amount you can invest is 50,000. For the infrastructure bond, the minimum amount that you can invest is 50. For ordinary bond is 50. For the infrastructure bond is 100,000. The other question we had been asked to respond to is the advantage of an infrastructure bond over other forms or other types of bonds. The infrastructure bond is tax exempt. These are raised by the government to cater for infrastructure projects, and they are tax-free in nature. So this is the advantage of these bonds over other bonds. Though they are not regular, ordinary bonds are regular, they are available every other month, but the infrastructure bond, you would have to wait till maybe they will find them being issued thrice or four times in a year. The other question we had been asked to respond to was what's a board reopening? So reopening of a bond is where CBK issues a bond which they had previously issued. Let's imagine a bond that had been offered last year, and now the CBK has reopened this bond to raise more money from it. So that's a reopened bond, a bond which had been formally issued earlier, which has been reopened by the CBK central bank as they try to raise more funds from it. The other question that we had been asked is what is a tap sale? And a tap sale is similar to a reopened bond, though in a tap sale, these bonds, it's the immediate reopening of a bond that had been offered maybe after a month, and this bond is offered. This bond is offered under the terms and conditions. There is no bidding. There is no nothing. You are accepting the bond with the terms that we agreed upon when this bond was first offered. The other question we had been asked to respond to is duration of a reopened bond. If you went for a reopened bond, do you wait? Maybe it is a 10-year bond. Do you wait for the 10 years or do you wait less the period? Let's respond to this question with an example. For a bond that had been had first been offered in 2021, and it is a 10-year bond, and it is being reopened this year. If you go for that bond, you will be waiting less period, because you are going in when this bond has been running maybe for 8 months or 9 months. So you will be investing for a lesser period. You'll be waiting. And actually, for anyone who has cared to check the prospectus, for a reopened bond, you will always find them indicating the bond, the duration, whether it is a 10-year bond, and also you'll find in brackets the period remaining. You'll find them indicate 9.6 years or 8 years are remaining towards maturity. So if you go for a reopened bond, you will wait for this period that has been indicated there, whether if it is 8, depending on when the bond is being reopened. The other question we had been asked to respond to is how to know bonds are available. Like, where do you get information on these bonds that have been are being offered by CBK. You can check in the CBK website on the Treasury bills or Treasury bonds. You'll always find the prospectus, and this is where you can find that information. All through your social media handles, they will always advertise these prospectus. And also, if you are registered for TMD, that is the Treasury Mobile Direct, you'll always receive a text message informing you of the availability or the issuance of a bond. The other question, the other question that we had been sent and asked to respond to was charges one should plan for, or other charges that one should plan for, or there are other charges that can be attributed to these. And the only charges we'll talk about is the RTGS transfer charges. When you'll be settling for your allocated bonds, there are bank charges, that is the RTGS charges. That is the only charges that you should plan for. There are no other charges. Unless you have gone for a reopened bond, whose pricing we'll be looking at in another session to be able to explain this so that people can understand the concept of accrued interest. Unless the bond had accrued interest, this is when you'll be asked to cater for the accrued interest. Because as I have explained in several posts that as CBK reopened bonds, their intention is that the offer price should reflect the prevailing market yield. So if you are getting a bond that has accumulated interest for 4 months, you would have to cater for that, because by the time this bond is paying interest, you will receive all the interest without saying that you came in 4 months late. So for the charges, if any other charges that can be attributed to these, maybe bank charges, that is the RTGS transfer charges. And actually, to clarify on that, if you the payment methods you can pay for your bonds, you can pay for your bonds via a check to CBK or RTGS. You pay your beneficiary bank, your beneficiary, that is the beneficiary bank should be CBK, and the beneficiary bank account should be your virtual account number. Or the other method of payment would be taking cash to CBK. The other question we had been asked is, is it better to split one's money if one has lump sum amount? They had given an example. If one had 500,000, should they get one bond or should they split to get per month? This will also depend, as I had said in question 2, this will depend with your investment goals. There's someone who wants to remain liquid throughout the year, and they want to be receiving coupons every other month. This is where you find someone splitting their bonds in a way that they can be getting coupons every other month of the year. This is where splitting comes in. But if your goal is not being liquid, then there would be no sense of splitting the bonds. You can get one bond. For splitting of bonds, the best person to go up this way is someone who is accumulating their funds slowly. Just imagine someone who is able to raise 100,000 every 3 months. So after every 3 months, they can always be getting a bond, and after maybe another 3 months, they can get another bond. Though if you have a lump sum amount and you get a good investment, you can actually go with all the whole amount. Or if you have a goal of remaining liquid, then you can choose to split your bonds so that you can achieve this objective. So the other question was calculating the amount to pay. And when we bid, when we are planning to be allocated either treasury bills or treasury bonds, what will always happen is after the results, after the auction, CBK will send you the results. Or if you are not able, if you didn't receive a text message, you should send an email or call and ask for a bidder's report. In this bidder's report, either on text or via email, you will be guided on the amount that you are supposed to pay. So calculating the amount to pay should not be stressful. You should be able to get this. Another question I have always had people ask is that the face value and the amount they had been asked to pay differs. So by the time you were applying, you said you want to invest 100,000. And then by the time CBK is sending you the text message of the amount you are supposed to pay, you have been asked to pay maybe 101,000. And this can be explained by the other question we were explaining about reopened bonds, which carry with them accrued interest if they are not being reopened on the exact interest payment date. And also the price, what we call the data price, will always affect the amount that you are supposed to pay. Then when you bid, whatever you are bidding rate was, you could get a discount or a premium on the same. So this will change what you are supposed to pay, will alter what you are supposed to pay. But the amount you are supposed to pay is exactly what CBK sends through the text message confirming your success of the bid you had sent. Let's go to another question we had been asked to respond to, which was how does one pay for the allocated bonds without necessarily having to go to the bank? So during the presentation that I had done at the 52 Week Saving Challenge, I actually did a step-by-step on how to pay for your allocated bonds via RTGS through your internet banking platform. So if you want, for whoever had asked this question, if you don't want to go to the bank, you can actually pay via RTGS. You can initiate RTGS through your mobile banking, your internet banking platform. The other question was, are bonds worth it? That's an interesting one. To respond to this, we would have to look at who invests in treasury bonds. We find institutional investors are holding over 90% of over 80% of the government securities. And here we are talking about institutional investors such as banks. We are talking about insurance companies. We are talking about pension schemes. We are talking about retirement schemes, which we can call pension schemes. These are the people who are holding majority of these government securities. So banks have been accused of negating their business of lending to the private sector. And now they are lending to the government because of the lucrative rates of return they earn, and now also the nature that these bonds are secure, they are risk-free, unlike lending to the private entities. So that question of whether bonds are worth it, it would also depend on how an individual is looking at it. For someone who is able to invest their money and get a higher rate of return, well, this would make sense going for the other return. But for the risk averse looking for somewhere secure to park their funds, then bonds becomes a good investment option. Another question we had been asked to respond to is kindly help calculate the expected returns with 100,000 amount that has been invested in a bond. We'll take an example of a bond that have been offered a while back, that is IFB 2022/18, that is infrastructure bond of 2022, which had a tenure of 18 years. After the auction, the results, the agreed upon interest rate was 13.742 percentage points. And simply, what one will learn is that the 13.742 over 100 multiplied by your investment, gladly, the example I had taken, there is no tax to be calculated on it. So your expected return yearly, that is per annum, would be around 13,742. Though we had already agreed that Treasury bonds pay interest semi-annually. So you'll be receiving half of 13,742 every 6 months. The other question I had been asked to compare money market fund returns and board returns. So money market fund, as I had already said, responding to another question in question 2, these are good forms of emergency funds. I keep a money market fund as an emergency fund, not necessarily as an investment. But for someone going for a bond return, for bonds, we had already agreed that it will depend with your investment goal, and then you can, if you are looking to invest for 10 years, then a bond becomes an attractive way of doing it. The only thing one should be cautious to note is that for money market fund, you need to know how to do due diligence, because you are giving your money to someone else to invest on your behalf. So you would have to know how to do a due diligence, lest you lose your money. The other question, we had been asked to compare SACCO returns with bond returns, and I think these would also be answered as the previous question. And would say for someone going to a circle tend to be someone who is looking to save their money and also have a platform where they can borrow money at a cheaper interest rate. So the returns override the reason why one was looking to invest. So I think the reason would be more justifiable going for, if you want to get a loan in future, then you can go for a circle. If you want to somewhere you can be saving some small amount, then a circle would come in handy. I think we also should just do some justice and say that money market fund will tend to pay a rate of return of between 8 to 9 percentage points, but you can find a bond paying as high as 14%. Then the other thing to note is for a circle, we have circles paying interest on deposits as high as 10, others 12. So in most cases, they might not even compare. For the advantage you'll find with the circle is interest on interest on what we call shares, the withholding tax will tend to be lower than your ordinary bond, which has less than 10 years, because a bond with less than 10 years will charge withholding tax at a rate of 15 percentage points. The other question I had been asked to respond to was, can I take a loan to buy a bond? And then to respond to this, would say majority of these loans, today the interest rate might be 13 percentage points, though banks have been given leeway to replace the loans with when the economic conditions change. So you would find yourself having to deal with uncertainty. You would find yourself having to deal with uncertainty because you don't know whether your interest on the loan will increase in future or not. And someone else had also asked that they can get a loan from a SACCO and they use these loans to pay for the bonds. Maybe get a bond paying interest rate at around 13.9 and get a loan at 12.5 maybe. And my question was, what is the motivating factor? Would it be the 1 point something? Is it really worth the risk? For anyone who is willing to get to bonds and they want to grow their portfolio overnight, I don't think this would really work. But the best strategy would be going for getting these investing 100,000 maybe after 2 months, after another 2 months. In 2 years, gradually you'll find someone with a portfolio of bonds worth 2 million, if that was the desired target. But going for a loan would have to work around that and see the motivating factor. And with the now risk-based pricing of loans that banks have been allowed, I don't know how that would work for that individual who had asked that question. The other question was whether a group or a chama can invest. Yes, a group or chama can open a CDS account with the central bank and go ahead to invest in treasury bills or treasury bonds. So this group should be registered. They should have a KRA PIN certificate, and also they should have a bank account registered under their name for them to be able to invest in these treasury bills and treasury bonds. The other question that had been asked to respond to is whether one can invest from Diaspora. And if one had not opened a CDS account, opening a CDS account from Diaspora would prove to be stressful, because this is the process that would ensue. When you get the mandate card, you are to fill it and send the mandate card to your bank, and the bank will demand this mandate card to be sent via courier service. And then after they have signed the mandate card, you are to receive the mandate card and now send the soft copy, scan and send soft copy to CBK. After you have scanned and sent the soft copy to CBK, you would then again have to send the hard copy that you had signed to CBK via courier service. So it proves to be a lengthy and tedious process. The option that one has is investing through maybe investment banks. We have a couple of investment banks that can open for you an account when you are in the diaspora. So for someone who is in the diaspora and they want to invest in treasury bonds and bills, this would then be a good option of going through these investment banks. The other question we had been asked to respond to is whether I'm supposed to pay tax on the interest earned from these securities, and whether they should file when filing their returns. So interest on these government securities is charged withholding tax. So withholding tax is charged at source. So it is the CBK to deduct and submit the tax on your behalf to the Kenya Revenue Authority. So you are not to pay tax on what you have received because it has already been deducted. The other question, the last one, we have been asked to comment on the default risk of these government securities. And someone had asked, has it happened that the government has defaulted on paying, or what would have to happen? And the last incident when the government had shown the signs of default is when during COVID-19. And what occasion there is they were not able to redeem back some maturing Treasury bill. And what they did is they negotiated with the investors, and they gave them an option to get infrastructure bonds, which was a 3-year infrastructure bond. So basically, the default risk is low, though what would happen if the government is constrained, they will negotiate with the investors and be roll over the amounts that were to be redeemed. So that's it for the question that we had been asked to respond to. For anyone with a question, it is so welcome. You can contact me via my inbox or in the comments section. Let's cultivate saving and investing culture. If you have not joined the 52-week saving challenge group, kindly do. I comment further on these issues at the group, and let's have an engaging and educative time there. Thank you. My name is Wakamiro. So some other time we can always talk in regards to investment, finance, and everything in between. Thank you. Bye.